All right, welcome everyone to another live trading session. Today is Tuesday, February the 6th, and I'm here with a few of our Discord members. We're going to do another live trading session where we put on a new trade and then maybe talk a little bit about a couple other things in the account. It's not going to take long at all. As you know, we basically do a few minutes per week or per trade. Let me just mention something here that I changed on the spreadsheet. It's just a verbiage, but I think it's very important to understand this is going to be on your 1.6 version of the spreadsheet. And I changed the verbiage here from target yearly return to target CAGR. Everybody knows CAGR is compound annual growth rate. And this is a better representation of what we're trying to achieve, because if you're shooting for a target every year, whatever the target may be, well, that's kind of, well, it's impossible really to predict that any given year, because you're going to have drawdowns and whatnot. But the CAGR includes the drawdowns. So we are looking for an average of over a few years. We want to look back and say, okay, we did 20% every year, even though we had some drawdowns along the way, because this is all priced into our strategy, into the amount of premium we sell per week. So bottom line is, on the years when there is not many stop losses, when the market is generally not pulling back strongly, we'll overperform. That's a given. We'll do 25, maybe even 30%. And then on the years that we had some losses or book wipes, we'll do less, whatever, 10 or 0. That doesn't really matter. Over time, we want to converge around 20, and we can change the target as we adjust our risk appetite and maybe build some hedging, and then maybe increase that or lower if you need to. But it's important that we understand that the number here that we're shooting for is a CAGR and not any particular given year target. Any questions on that, guys, that are in? Nope. Okay. All right. So let's go and start a trade for today. We have, let's do the theta and the delta and theta, 61.41. So 61.41. I already put in the Netlick 54.633. VIX is 13.56, so pretty low. Our buying power usage at the moment is, if we go here, we take a look at, let's refresh just in case, 14.7. So very, very low, 14.7. So we are in a good shape to put another trade on. Our notional exposure, it's around 11x, so which is in line. We always try and bring it down, but this is still in line, so we're okay. So as usual, we're going to go and take a look what market offers us today. And to do that, we go to ES. We go closest to 90 without going under, which would be 101 days. We go to around 8 delta. And actually, let's just take a look what is our target if we were to keep one trade per week. It would be around 970. This is in order to stay on a pace of one trade per week. So let's see. It's not necessarily that we target that. I'm just wondering what it is and how is that corresponding to the market. It's actually pretty much in line here, but as we have option to go anywhere between 7 and 9, we might want to go and, well, we may or may not. Let me see, 950 here. Let's stay here. There is no reason to push it higher. So let's just see if we can get the full amount, and if we can, if not, if it starts going down, then maybe we'll go to 9. If it's not, so where is it here? Let's actually cancel, because 1887 is going to start going down. So let's do that. Let's go back to trade. Where is it? 101. Let's go to 9 and close it quickly. 9 delta right here. There you go. Let's see that. All right, filled. So 21. We got 21. And as you know, now we go to MES. We go to closest to 90 without going over. So we go to 84. And in order to stay under 20%, our goal is to do 2 PDSs at 75 wide and stay under 20%. So long as we pay under 21 for each of them, we'll be will be okay. And generally, we look at 35 delta for our long, which would be right here, and then 75 down, and quantity, let's not forget that too. So see, 1825, this is perfectly fine. There is no need to push and spend more than it's necessary. If the market is giving us this, we are fine. We just want to get 2 of these. So maybe we'll have to up it up a little bit to get it closed. Let's see. Boom. All right, maybe we'll have to go up a little bit more. Let me see. Let's find it. Where is it? It's gonna be here. Okay, so okay, let's see. Replace. We'll go tad higher, and this should close now. Yeah. Okay. Perfect. So let's take a look here and put it in the sheet. See where we at. I already put a couple of things here. So let's see the. Let's quickly take a look here. And this was 44 and 101 days. So 40, 44, 101, and we did 21. We got 21 for it. And on put debit spreads, we're going to have 45. This is MES. Today's date right here. And let me just double check. It was 49.25, 49.25, and then 48.50, and I think it was 84 days. 84 days. All right, and we paid 1875. So minus 1875, and we did 2 of them, and there you go. So that's it. So far we have this one here that's closed or expired, and we have a bunch of still alive put debit spreads. We have a little hedge here going on. This is the one, the perpetual hedge. We did it on Friday last week. Last week on Friday, we closed one. Basically, we rolled it, and that cost us overall $42, which is in line. We're looking somewhere around $40 to $50. And what we do, what we get for that is basically this right here.
Obejrzyj sobie coś w telewizorze.
Tomek, will you go on mute, Tomek, please?
Sorry.
No problem, no problem. And let me see, right here. And so that's the one right here. Gives us a little bit of protection, and obviously it's losing money when the market is, staying, around or not going down. We're losing a little bit of money. This is meant to be like this, and we're going to lose a little bit of money on that for the next few days, and then we're going to replace it on Friday again. And as you can see, we have a bunch of put debit spreads here, and so let's go and group the one that we just did. Where is it? Right here. There you go. We just group it and we call it 45, I think it was. And then we go back to the nakeds. There you go. And this one was 44. And that's it. We are done with our trade. We can take a look just to see how we're doing here. Quickly, we have 5 open positions. All of the other positions are closed for profit at 60%. Everything is going smooth. Here you can see an average. Let's take a look at average. 24 days on average, which is under the targeted, or what we account for, 28, 30 days. So that's fine. Obviously, that's going to mean revert at some point, and we're going to be staying in the trades a little bit longer, but that's all part of the plan. And then on the main page, we can take a look here. I also changed this. It's a little bit easier now to read. It says percentage here. So let's see. Not much. Our target is here. We just collected 1,050, which still put us on a week schedule, so on a 7-day schedule. So our next trade is on Tuesday, February the 13th. And I think that's it, guys. If you liked it, make sure you subscribe, like the video. And if you want to participate in these, live trading sessions, make sure you join our Discord group. Link is in the description below. And we also do mastermind sessions. We just did one last week on hedging. It was very good, pretty long, but I think good. And we'll continue to do those on different subjects. And with that, have a fantastic rest of the day. I'll see you next week.